that are concerned with this pre-existing condition will also be covered. So that was one of the main added benefits of having to be a part of a commercial health insurance product. These are the benefits, like I told you, all the costs are covered. Sometimes there are a bit of a deductible at the beginning. So, for example, until X amount you pay, and then after that we pay all of it. Or there is a ceiling. Sometimes there is co-insurance. Like for example, we pay 90%, you pay 10%. All of these things are adjustable and are tailored to the policyholder's needs. Exposure for an insurance company in terms of a product like that would be basically the number of times an employee of the insurance of the insured the company would use his card, which is the frequency. If we are talking in actual sense, that's the frequency. How many times a person gets to use his medical card, whether it's for prescription drugs, whether it's for a doctor's appointment, whether it is for a surgery. Uh, Type of risks that are usually associated with such a product are, for example, if the company is mainly blue collar workers or white collar workers, because that distinction tends to affect how many times they tend to visit doctors. Like we actually saw from actual data from the company that blue collar workers tend to visit doctors' appointments much more because of their habits, their tendencies, and the general scope of their work. Claims can be small, like checkups, prescription drugs, and sometimes they can get very large. For example, major surgeries like appendicitis and something like that. Actually, as a actuary working in health, you will get to be a little bit more familiar with the doctor's terminology for some surgeries. You start to see patterns in the data that this surgery costs quite a large amount of costs are quite a large amount of money. So we need to keep that in check, see how many people actually do the surgery, why it's happening frequently, and things like that. You tend to work with a lot of pharmaceutical background, a lot of doctors in the claims team, so they tend to familiarize you with their terminology, so you get to know the data a little bit better. Okay. Moving on, type of clients for this product is usually any entity, financial or governmental. We have some governmental entities that are insuring their workers privately, especially since, unlike the UK, there isn't many countries that have universal health insurance like the NHS, which actually I want you to look at the market size here. You can see that the UK market is 4.1 billion. These are all in GBP. 4.1 billion. The USA is 1 trillion. That actually is purely, or 90% of it, I did some research about it, it's because of the NHS. Because companies here don't tend, because employees are always covered by the government itself, they have the benefits, they have all of this. Compared to the US are hugely dependent on the companies for their medical insurance. And in the US, you really need medical insurance. If you go to a doctor appointment, it's gonna cost you a lot of money. And actually, this is one of the key factors that affects how the product is selling in the market, is whether the government offers this benefit for all of its citizens or not. It's usually sold through brokers because sometimes the deal can get in the millions and of dollars or pounds. So usually brokers are the one that handle this kind of traffic. And also one of the things, some of the products are sold through direct channels. So a company might, for example, Goldman Sachs, go like, yeah, we've seen the market, we have some experience. We know that, for example, Allianz has the best cover for our employees. We're gonna go directly to Allianz. We're not gonna go through any brokers to kind of cut down the cost a little bit because they're cutting out the middleman. So I will go directly to Allianz. I will purchase the policy for Allianz. I want Allianz, so I'm gonna directly have my negotiations with Allianz, not through a third party. Uh, the main players in the UK are Bupa, AXA, Aviva, and Vitality. In the global market, actually, I wanted to highlight also because of the US is such a huge market for this product. All of these companies globally, except Bupa, are US companies in the global market. Fun fact, Bupa and a lot of these medical insurers tend to vertically integrate. Like, for example, Bupa actually purchased London Medical, which is a diabetes specialist. And also in 2008, they purchased Victoria Hospital. They also purchased a cancer specialist. They also purchased another type of medical specialist. This type of vertical integration usually helps companies control their claims, cut costs, and in general have more control over the population that they are insured. That's it.
Thank you very much. Any questions for commercial health insurance?
Yeah, does anybody have any questions?
Okay. What's the difference between commercial health and PMI?
That's basically that.
PMI, private medical insurance.
Yes.
Private medical.
So it's the difference between who is actually buying the products. So the commercial is bought by any entity. So the employer will buy the insurance and give it as a benefit to the employees. But if you go for private medical insurance, you're buying it yourself. More on that in an hour when we'll discuss individual health. Now, given that this is actually bought by the employer, one other relevant exposure measure is typically payroll, like yesterday or on Monday, for the number of employees. Because the number of employees is something which is known beforehand. The premium can be adjusted with respect to the number of employees. So if the company adds 2 more employees, then the premium may be automatically adjusted because exposure has changed. Thank you very much. Yes, one more.
Yeah, how is it that the exposure is already known, like the number of doctor's appointments?
So this one is not known yet. So I think this one
Yeah.
might be used as well as part of or historical doctor appointments
Oh,
may be used as I think doctor appointments halfway between exposure and risk and rating factors might be actually more a rating factor than an exposure measure.
so is it the number of people in the
Number of people I think is typically used as big employee or small employee, but the number of doctor appointments can also be relevant historically. Like, was this an employer often go, or did the employees often go to the doctors? That make sense?
Yeah, but I wanted to add something for you. Usually, the number of doctors increase was an exposure factor because if this is an old client, for example, you've been with you for 1 or 2 years, you get to know how many times this company visits the doctor on average. So the average person in this company gets to visit the doctor, for example, 6 times a year. So when you take into consideration, depending on the company size, take into consideration how big the company is. Like, for example, it's 10,000 employees. So on average, you get to expect an exposure of around 60,000 doctor's appointments. Then you can get the severity from how much does it cost for a doctor's appointment. Then you can finally reach a burning cost, which is, for example, the last thing that you want, which is how you rate the pricing for this client.
Okay, so it is based on historical.
Yeah, it can be based on historical data. Even if the client is new, you tend to have a way to acquire their historical data. So with their
Oh.
previous insurer.
Okay.
As negotiation,
Okay.
if you want better terms, then the more information you provide, the better terms you'll have. So it's a combination of this frequency of doctor appointments with the size of the organization, which together from the exposure. So moving on from that one, you'll be reserving data you all share.